The US government shut down overnight and private jobs data is weak, so US bond yields fell. The Reserve Bank of India holds rates but is seen cutting again soon, and Australian house prices jump in September. That's coming up in our 5 Things in 5 Minutes on Thursday, October the 2nd. And then in our deep dive interview, ANZ international economist Kishti analyses support for Papua New Guinea's currency, the kina, and how a wave of foreign investment is set to help the nation's economy.
Once the infrastructure is up and running, once the gas projects, the mining projects come online, then PNG can use better infrastructure to really maximize its export potential in about 3 to 4 years' time.
But first, in 5 and 5 with ANZ, US stocks were steady overnight, welcoming hopes for more Fed rate cuts after the ADP private jobs report showed a surprise fall of 32,000 in September. That's ahead of the key non-farm payrolls report tomorrow night. The US government shut down too, although markets weren't too worried, but gold benefited from demand for those looking for safe havens, and as those bond yields fell, the metal's price rose yet another 0.6% to $3,897 US an ounce as of 4 a.m. Sydney, Melbourne time. It hit a new record high overnight earlier of US $3,922 an ounce. Meanwhile, the Reserve Bank of India held its benchmark rate overnight at 5.5% as expected, but ANZ economist Diraj Nim says the RBI's lowering of its growth and inflation forecasts was important.
The sequentially softer growth inflation outlook creates scope for the Monetary Policy Committee to support growth further. Interestingly, the Reserve Bank of India dropped the word limited scope that was very much there in their August meeting commentary to just saying there is scope to support growth further, which has led us to think that if growth indeed surprises on the downside, then there is not scope for just one more rate cut, but maybe two, and therefore the repo rate could head lower by about 25 to 50 basis points over the upcoming months.
As of 4 a.m. Sydney, Melbourne time, the S&P 500 and the Nasdaq were 0.1% and 0.3% higher, respectively. The US 10-year Treasury yield fell 2.6 basis points to 4.122%. West Texas oil futures fell another 0.7% to $61.94 US a barrel. The US dollar index was flat. The Aussie dollar fell 0.1% to 66.10 US cents, and the Kiwi rose 0.3% to 58.16 US cents. Number 2, Australia's capital city house prices rose 0.9% in September from August, the strongest monthly growth since late 2023. Here's ANZ economist Maddie Dunk.
When you look at the capitals that were the strongest performers, it's the names that we've been talking about for most of this year. So it was Darwin, Perth and Brisbane, with prices up more than 1% in the month. And Darwin continues to be a standout. So far this year, we've seen prices are up more than 13%.
Number 3, Indonesia's headline inflation rose to 2.65% year-on-year in September because of food price inflation. ANZ economist Crystal Tan says core inflation was weaker, though, at 2.19%, indicating underlying demand is contained.
Inflation is still expected to land in the lower half of Bank Indonesia's 1.5 to 3.5% target range this year. So that's going to give the central bank some breathing room. But given that Bank Indonesia has already delivered 3 back-to-back rate cuts in Q3, and also the recent pressure on the rupiah, we do think that the central bank may choose to slow the pace of easing going forward. And they also meet monthly, so there is flexibility in terms of timing.
Number 4, Indonesia also released August export data, showing annual growth slowed to 5.8% in August from 10% in July, with a slowdown in growth of exports to the US the issue. Meanwhile, South Korea released September export data with headline 12.7% growth, overstated by more trading days this year. Here's Crystal again.
So if we look at exports on an average daily basis, exports actually fell 6% year-on-year. So there is some signs of softer underlying momentum. And again, more signs that US tariffs are biting. US exports fell 1.4% year-on-year. So tariffs are weighing on Korean auto and steel exports to the US because those are facing high US tariff rates. And, tech-related exports did do well because they're exempted, but they could only partly offset the decline.
Number 5, New Zealand residential building consents rose 6.9% in August from a year ago. That's the second monthly increase in a row. ANZ senior economist Matt Galt says while the data can be volatile, the result was on the stronger side.
Given the soft housing market, the cost of building a house is still high compared to what you can sell it for, but it does show that the residential building cycle is perhaps reaching a floor and there might be a gradual increase from here.
Matt Galt there. Now, in our deep dive interview, ANZ international economist Kishti explains how Papua New Guinea's economy is set to be supported by foreign infrastructure investment in coming years, and how its currency, the kina, is benefiting from those inflows and strong exports.
The kina, since about mid-2014, has really been a seller's market. And what that means is that the supply of foreign currency has been limited, but at the same time, the demand has been quite strong because PNG is largely a food importing country. And that undersupply of foreign currency has led to a deficit position in the FX market. And as a result, we have seen a modest depreciation in the value of the kina since about mid of 2014.
What about PNG's exports? Cocoa, gold, coffee? How are they performing?
So what we have seen in 2025 is better flows of foreign currency into the country. And that's because coffee and cocoa prices are at record levels this year and now joined by gold. Very good commodities to be exporting at this present time. So those increased flows to the country has eased market conditions somewhat in the sense that it has pumped liquidity into the foreign exchange market. And in the end, that has essentially slowed the pace of depreciation a little bit.
So what's the long-term outlook for the kina then?
We think for Papua New Guinea to get a permanent solution to the deficit in the foreign currency market that it has experienced since about mid-2014, it needs to see sustained foreign direct investment into the country. And I think PNG will get that, but it's still some months away. I think by the time we get to the second half of 2026, the country is set to kickstart its next wave of construction projects, and most of that will be driven by foreign capital, which will ease the market, and we think it'll restore the market back to a balanced state, and Papua New Guinea can then return to a free-floating exchange rate regime where the price is determined by the ebbs and flows of the currency.
So what's that investment likely to go into, and will it produce much in terms of export earnings?
Not so much export earnings immediately because some of these investments are going into gas projects which have a long lead time. You're going to be constructing these plants and pipelines for at least 4 years before you can get anything on a boat to the overseas market. So it will take some time. But it's not only just the gas projects. Papua New Guinea is going through an infrastructure investment sort of phase as well, where there's a lot of development partner support for PNG to upgrade its key infrastructure in ports and roads, electrification. So there's money coming into the country, which will help the FX market. But once the infrastructure is up and running, once the gas projects, the mining projects come online, then PNG can use better infrastructure to really maximize its export potential in about 3 to 4 years' time.
And all of these projects, they've signed off and they're in the works, or is there still some doubt about them?
Well, a couple of the key projects that Papua New Guinea is really looking forward to is this big gas project called Papua LNG. It's about a $15 billion US capex for the project. That project is right at the end of its engineering phase and looks likely to go to a final investment decision by the end of this year, or it could be early next year. But definitely very positive signs for that particular project.
And who makes that decision?
It'll be the board of the investors. And here we are talking about some of the majors in the oil and gas sector in the world. We're talking about the ExxonMobils of the world, Total, and Santos. They're all involved. So it'll be the board of these companies who will make the investment decisions. But given the project is so far advanced, it is right at the sort of end of its front-end engineering design phase. It looks likely that a final investment decision will sort of be reached by early next year.
Kishti there. That was 5 and 5 with ANZ for Thursday, October the 2nd. Catch you tomorrow with detail about how Australian household spending tracked in August. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.